Stop everything. You need to see this. We're talking about one of the biggest financial technology players in the world, a company called Fiserv. If you hold the stock or if you care about the health of the payment sector, October 29th, 2025 was an absolute bloodbath. On this day, the stock price for Fiserv plummeted. We are talking about a crash of more than 40% in a single trading session. That kind of drop is catastrophic for a company this size, and it immediately sent the stock price crashing down to its lowest level in over 5 years. This massive single-day decline set the company on track for its worst day ever since it went public in 1986. What caused this market chaos? Simple. Fiserv completely whiffed on its third quarter financial results and then announced it was slashing its entire forecast for the rest of the year. Let's break down the awful truth of the third quarter numbers. The company reported adjusted earnings of just $2.04 per share. Wall Street expected better. Analysts were looking for earnings of about $2.60 per share. That means Fiserv missed profit estimates by a massive margin, about 23%. The sales figures were just as ugly. Total GAAP revenue came in flat compared to the previous year, hitting about $5.3 billion. Analysts were expecting over $5.3 billion, which means even the sales number fell short. But the earnings miss was only the start of the pain. The real bombshell that caused the 40% crash came when the company had to reset its outlook for the full year of 2025. Listen closely because this is brutal. Fiserv originally told everyone they expected their organic revenue, that's sales from core business stripped of outside factors, to grow by about 10% this year. That's a strong growth rate. Now, they wiped that slate clean. Fiserv is now guiding for organic revenue growth to be slashed to just 3 to 4%. They cut their expected growth rate by more than half for the second time this year. And the profit forecast? That was destroyed too. The company previously expected adjusted earnings per share for the full year to be around $10.20 per share. The new forecast? Only $8.55 per share. This massive revision shocked investors and hammered the company's credibility, missing the Wall Street consensus estimate by about 16%. This drastic guidance cut dented the company's credibility and suggests operations are heading toward a multi-quarter turnaround with much less visibility into their future earnings. So how did a company this big miss the mark this badly? The CEO, Mike Lyons, who just took over in May, admitted the painful truth. They had set themselves up for failure. He said their prior forecasts relied on incremental assumptions that included unrealistic expectations for massive business volume growth, record high sales activity, and widespread efficiency improvements. He stated these goals would have been objectively difficult to achieve even under the best conditions. The CEO pointed out an internal failure, too. In recent years, the company chose to save money by delaying necessary investments and cutting some costs to artificially boost short-term profit margins. Now, he says, those short-sighted decisions are actively limiting their ability to serve clients well and stopping revenue from growing to its full potential. A factor that contributed to the slowdown was the deteriorating economic environment in Argentina, which is an important market for Fiserv. The country's economy experienced a significant devaluation of its currency and a jump in interest rates. Just last year, Argentina contributed 10% to the company's growth rate. The disappointing results were not uniform across the company's major business units. Their Merchant Solutions segment, which helps businesses accept payments, still saw a slight organic revenue growth of 5%. But the Financial Solutions segment, which services banks and credit unions, actually declined by 3% in organic revenue. Within that key financial segment, digital payments revenue dropped by 5%, and banking-related revenues fell by 7%. The management team understands that they have a major crisis on their hands, and they're moving aggressively to fix it. The CEO is launching an emergency internal overhaul called the One Fiserv Action Plan. This plan focuses on 5 strategic pillars, including prioritizing clients, building up their Clover platform for small businesses, creating innovative payment solutions, using artificial intelligence to achieve operational excellence, and employing disciplined capital allocation. Clover is supposed to be a major growth engine, built to be a top point of sale system and operating platform for small and medium-sized businesses in the U.S. Fiserv is heavily investing in it, even acquiring part of a major bank's merchant processing business in Canada recently to expand its reach. The CEO admitted that Clover managers are starting a full overhaul of the client experience because the platform had drawn merchant complaints about the newer system's costs and complexity, which limited its growth. To implement these dramatic changes, Fiserv announced a sweeping leadership shakeup on the very same day as the Disastrous earnings report. First, they named a new finance officer, Paul Todd, who previously held the top finance job at Global Payments. He's taking over immediately, effective October 31st. The former CFO will stay on as a senior advisor through the first quarter of next year to ensure a smooth transition. Second, the company is bringing in new leaders at the top level. They named two co-presidents, Takis Georgopoulos and Vivia Surya-Devara, who will start in early December. Ms. Surya-Devara has a deep background, having served as the Chief Executive Officer of Optum Financial Services and previously as the Chief Financial Officer at Stripe and General Motors. This is a clear move to bring in highly experienced leaders to right the ship. Third, the board of directors is also getting an overhaul. 3 new members are joining the board at the beginning of next year, including Gordon Mixon, the former CEO of Royal Bank of Canada, and Gary Shedlin, a vice chairman at BlackRock, who will head the audit committee. These appointments emphasize the urgent need to strengthen the company's financial controls and oversight. Fiserv also announced they're moving their stock listing from the New York Stock Exchange to the NASDAQ next month, where it will trade under the ticker symbol FISV. For investors, the uncertainty is extreme. Financial experts are now openly encouraging investors to focus on other financial technology stocks that have better visibility and more dependable management. Some analysts warned that these third-quarter results are difficult to explain and harder to defend and suggest that management took its eye off the ball earlier in the year. Beyond the operational issues, Fiserv's balance sheet also shows some structural concerns. The company's financial health metrics, like its Altman G score of 1.72, place it in the distress zone, indicating a potential risk of financial instability. Furthermore, its debt-to-equity ratio, which measures reliance on borrowed money, stands at about 1.2. These are major factors the new leadership must address. This huge decline in Fiserv shares also sent ripples across the entire payments industry. Rival companies like FIS, Global Payments, Block, and Jack Henry & Associates all saw their shares drop significantly as investors grew worried that the problems affecting Fiserv could spread across the entire financial technology sector. Fiserv is the world's largest financial technology provider, helping clients with everything from digital banking to payments processing. This stock crash is a harsh reminder that even the biggest players are vulnerable when growth slows and management overpromises. The next few quarters will be a crucial test to see if this new leadership team can deliver on the promises of the One Fiserv plan and finally regain investor trust. If you want to stay ahead of the curve as this massive financial turnaround story unfolds, hit that like button. Make sure you subscribe so you don't miss our next market breakdown. And ring that notification bell so you get the news as soon as it drops. I'll see you in the next one.